stacks of paper that they can't do anything with. Right now, that's all they do is they stack dollar bills, but they'd be much better off if they actually got the enjoyment that we're now getting from all the products that their efforts are producing. Because right now, we get the fruits of their labor, and they get a piece of paper. So I don't think that China or the rest of the world is going to be in a position to give us an additional bailout when they're already, suffering the consequences of all the money that they've already spent bailing us out. We have exported our bad monetary policy all around the world. I mean, China is suffering now inflation because of their currency peg, and they might try, to combat it with higher reserve requirements or higher rates, but none of that's going to work. As long as they're printing RMB to buy dollars, they're going to have inflation. And the only way to solve the problem is to stop creating it. They can't do that unless they let their currency go up. And I think that this is going to happen, that countries are going to back away from buying our debt. And then, it's just up to America. There's no Marshall Plan for the United States. So either we confront these problems in a realistic way, which means rejecting all the tenets of Keynesianism, allowing the prices to fall, real estate prices, stock prices to fall, allow Americans to rebuild savings, to go back to sound money. It'd be great if we could go back on the gold standard, but even if we don't, we've got to let interest rates go up dramatically in this country, and allow a pool of savings to rebuild. And of course, if we're going to start producing, one of the other problems that we now have in America is that we have burdened industry with so much regulations and onerous taxation, and even beyond that, the litigation. I mean, one of the riskiest things that you can do in America is employ somebody. It's very risky to hire people, and there are many ways that you can get sued if the government determines that you didn't hire them the proper way or you didn't treat them the proper way. So a lot of businesses just try their best not to hire anybody, or if they hire somebody, they want to minimize the number of people they hire because they need to minimize that risk. They need to minimize that liability. If you can outsource the job, that's what you do. If you can automate and replace a human being with a machine, that's what you do. So we're going to have to change all those rules and regulations because there's going to be a lot of Americans who are unemployed as a result of what's going to happen. And if we're going to put them to work productively, the government's going to have to get out of the way and let it happen. And it also means, like a lot of other conventional myths, are going to have to go away. Like everybody has to go to college. I mean, unfortunately, everybody doesn't have to go to college. There are a lot of people that would be better off without going to college. And the biggest problem too with everyone going to college is the tuitions are through the roof. I mean, we have Americans now that are graduating with 4-year degrees. Of course, now it takes 5 or 6 years to get those degrees. But you get out of college and you have $100,000 of debt, you have $200,000 of debt, and you're no more qualified to do a job than somebody who hasn't even gone to college. A lot of times they major in things that are completely irrelevant and give them no real job skills, but it doesn't matter because they were able to get a government guaranteed loan, and so they can pay some inflated tuition to get a worthless degree. We don't have the resources anymore to spend all this money basically sending our kids to 5 or 6 years of summer camp, and then they graduate in debt. We can't do that. We have to let the market bring down those prices. We have to do the same thing in healthcare. We've got so much of the American economy now devoted to healthcare because of all these government subsidies, and that's why it's so expensive. We have to deal with that, and all this stuff can be dealt with if we go back to free market principles, if we can get the government out of the economy, out of micromanage the economy, and we can go back to free market capitalism. And we are in a gigantic hole. There's no question about it. Years and years of this Keynesian policy and cheap money has destroyed what was a once mighty industrial economy. There's no question that we are in a gigantic hole. But I also know that we can get out of it. I mean, there have been countries that were in worse shape. I mean, look at the problems of Germany or Japan at the end of the Second World War. I mean, those countries came back. I mean, they were, imagine what their countries, the shape that they were in after they lost those wars. True, we helped them a bit, but what really helped them was capitalism. And so it's going to work in America. I made the comment that capitalism is doing really, really well in China. And I'm sure if we tried it in America, it would work just as well here. In fact, it might work even better. But anyway, I'm not sure if I've been speaking for an hour yet, but I want to Joe, I'll open it up to some questions if anybody has any. Yeah.
My name is Peter White. Thank you very much for a very stimulating talk. You seem to be saying that bad government policy can't trump fundamental market forces forever. But Washington seems to be saying, yes, it can. And the political mindset in Washington is just kick the can down the road, and we can keep doing that forever. And most of us will be gone in 4 years. There'll be another bunch of guys, and they won't be responsible, and so on. We'll just keep kicking the can down the road.
Yeah.
So just one more last to that. So is there really going to be an end to this process? And then if you're right that the current bubble is a government bubble, how will that burst? Will that be sovereign debt default?
Yeah, first of all, the problem with kicking the can down the road is eventually you run out of road. And I think we're at that point. I mean, yes, they're going to try to do it. I mean, no politician is going to confront an issue like this until there's a crisis. Because after all, let's try to postpone it so we don't have to deal with it. Because they're thinking of it in terms of politics. I want to get reelected, and I'm not going to get reelected by leveling with the public and letting them know how bad it is. They want a government fix. So yes, but you run out of road. I mean, I don't think there is a lot of asphalt in front of us. It's all behind us. And so we're going to have to deal with this relatively soon, despite the fact that the politicians don't want to. But that's why I think it's going to be a crisis to get us to do it. And yes, in answer to the second part of your question, the bursting of the government bubble is a sovereign debt. I mean, you see the evidence of the government bubble in the bond market. I mean, look at the yield on 30-year U.S. Treasuries at, 3% or something like that, and the 10-year is just over 2%. It actually got down as low as 1.7 last week. You know, is anybody, who in their right mind would loan money to the U.S. government for 10 years for 1.7%? Nobody would do that. In fact, nobody is buying a 10-year treasury to clip coupons and redeem it in 10 years. Everybody who is buying that bond is buying it with the intention of selling it before maturity. The question is to who? Who's going to buy it when everybody wants to sell? It's the same thing as people who are flipping condos in Las Vegas. People were buying condos without ever having the intention of moving in. The intention was to sell it to somebody else, who also had no intention of moving in. But at some point, someone has to live in that condo. So at some point, somebody's got to be willing to hold that bond to maturity. And, so somebody's going to get hit with these losses. And at some point, people are going to stop buying. Now, a lot of the buying of U.S. Treasuries is coming from foreign central banks. So, they're not buying for economic reasons. They're buying for political reasons. China says it's in their political interest to show up at our auctions and buy our treasuries. It doesn't matter to China whether it's a good investment or not. They're doing it because of political considerations. But the political winds can change. China can decide it's not in our interest to buy these bonds, and then we're not buying them. And so the buyers are going to go away, and ultimately the only buyer that's left is the Fed. But when people realize that the Fed is the only buyer, that's it, it's over. And of course, because the minute they see that, then everybody wants out of dollars. And it doesn't matter if the Fed is buying treasuries. I don't want corporates. I don't want munis. I don't want any debt denominated in dollars. Because if you see the Fed is printing all this money, the dollar is going to be losing a lot of value. It's going to be losing a lot more value than the interest rates. No one's going to want to buy, a General Electric bond that pays 7% if inflation is 15%. So then, and then the Fed, if the Fed wants to maintain this game, then it has to expand its quantitative easing. It has to start buying everything. It has to buy those GE bonds unless it wants to watch the yields go up to 20 or 30%. It's got to buy the muni bonds from the state. It's going to have to buy everything. And then what do you have? Right? You get Zimbabwe if the Fed is the only buyer of all the debt. So at some point, it has to stop. At some point, we have to make a decision. What fate do we want? I mean, are we really going to destroy the dollar? I mean, there probably are some people that think that we can create just enough inflation to ease the debt. And maybe if we just destroy half the value of the dollar over the next 5 years, that we can reduce half the value of the debt. It's not going to work. It's not, the government is not that precise. And even if it could work, I mean, that's still, if our creditors realize that that's what we're going to do, they're not going to sit and ride that down over the next 5 years. They're going to get out. When people figure out that our policy is to have the value of the dollar, they're not going to ride it down. So you can't have this orderly decline of the dollar because it'll become disorderly as soon as people wise up to what's going on. So we're going to get this crisis, and the government debt bubble is, the government is spending all this money. Now what is Obama? They want to spend more. They want to have a gigantic infrastructure program. I mean, we're broke. How are we going to afford this infrastructure? And I say it's like somebody loses their job and they decide that they're going to put in a swimming pool. Yeah, it's nice to have a swimming pool, but if you're broke, you really can't afford to do that. You got to do something else. Yes, it would be nice if we had prettier roads and nicer schools, but you know what? We don't have the money, and it doesn't stimulate the economy to fix up the schools, right? Just because you create a job by somebody working in a school, where'd the resources come from? Where'd the money come from? What aren't we doing because we're building that school? Maybe what we're not building is building a factory somewhere that we really need to build, because we have to produce. Ultimately, the government can create a lot of work, right? The government can create work for everybody, but it can't create real productive jobs, right? Everybody in the Soviet Union had a job. Nobody was unemployed in the Soviet Union. But, but you had to wait in line, 8 hours to buy a loaf of bread, because everybody was employed, but nobody was baking bread, right? So we need people employed productively, not just in government jobs, because government jobs don't produce. In fact, government jobs make everybody else less productive. I don't know if we have anyone here working for the government, but the private sector has to pay their salaries. The money that we send to Washington in America is the money that we can't use to invest or grow the economy. And when someone from the government, when the government worker spends their paycheck, what are they buying? They're buying all the stuff that was produced by the private sector. So we're supporting government workers, and any resources that the government takes from the private sector are diminishing economic growth. Yes, you can see the guys getting a government paycheck. Yes, we have the stimulus project to build this bridge, and here's 10,000 people who are working on this project. Okay, well, we're the 10,000 people that lost their jobs so that these 10,000 people can have a job. And and do we need this bridge? The government says it doesn't even matter. Even if we build a bridge to nowhere, the key is just to build a bridge. And of course it matters. I mean, infrastructure spending can be a benefit, but only if it raises our productivity. Yes, if building a bridge in a particular area ultimately raises our productivity because it makes transportation costs lower, because now we can go straight on this bridge instead of taking a longer trip, then yes, that investment in infrastructure can help the economy, but only in the long run, when the returns start to roll in. In the short run, the expense of the investment is a burden on the economy. We need the resources. We need to have the freed up resources to build that bridge. The payback comes in the long run. Now that doesn't mean we shouldn't do the investments. Obviously, if there's a payback, we should make it. But to say that we can stimulate the economy in the short run by doing it is false. But yet, the government wants to try to do this, wants to try to spend more money when it's broke. And of course, how does it want to finance the infrastructure? It wants to issue more debt. Well, that bubble is going to burst, because pretty soon the lenders are going to say, we don't want a loan. In Greece, nobody was talking really about Greek debt a couple of years ago. The debt was there, but nobody was worried about it. And the Greek government was able to pay it because the interest rates were low. All of a sudden, people start to say, they owe a lot of money in Greece. Maybe they can't pay it all back. And then the lenders get worried, and they don't want to buy the bonds anymore. And so interest rates start to go up. And now the government is, they can't afford to pay the higher rates. The same thing is going to happen in America. People are going to wake up and realize that we're broke, we can't pay this money back, and they don't want our debt. And then rates start to go up, and then we can't service the debt that exists. And then it's a self-perpetuating prophecy. We're running a gigantic Ponzi scheme. And if you don't think we're running a Ponzi scheme, our politicians acknowledge that in the most recent debate over raising the debt ceiling.